Let's talk about it with our A-list panel. StoneX Chief Market Strategist Kathryn Rooney Vera. Kathryn, let's turn to you now. Do you think that these wild moves in the bond market will overshadow what we're expecting to see from big tech and their earnings?
Well, if you think about it, if bond yields roll over, in theory, that should be positive for equities. We haven't seen that. And I think a good reason for that is because that is not the logical conclusion, meaning that equities do better if bond yields roll over, if we're talking about economic weakness being the driver of those bond yields dropping. So I think that equity risk premium is certainly not favorable. There's little room for valuations to offset earnings weakness. And as we go into 2024, Condessa, when we're looking at a deteriorating economic picture and high nominal rates that are probably going to stay so for an extended period of time, meaning that real rates get even higher, all of that is going to pinch consumption and pinch the high flyers that have taken the market higher year to date, specifically technology.
What do you anticipate then comes out of the likes of Meta and the others if you're looking at a scenario where the consumer gets pinched? Forget about even maybe earnings this week. Do you think that in the color, in the commentary on the calls, we'll get more indications of what's to come for this fourth quarter?
Yeah, look, I think it's hard to imagine companies in general in the S&P 500 improving their margins when you have this triple whammy of rising interest rates, labor costs, as well as energy prices. That's a difficult environment for corporate earnings. And when you look at composite PMIs globally, Condessa, they have not really done what many of us had hoped for, which was follow suit to services. Manufacturing has not surged higher. So that, with its correlation with earnings revision, to me, tells me that earnings are going to be revised to the downside. And I'll add one more thing, which is I think that 12% earnings growth for 2024 is remarkably optimistic, and I think it's probably going to be a lot lower than that.
What's your best piece of advice for this week and 1 day left in October?
I think it's a great opportunity to go long duration in this 4Q. I like agency paper. I think its relative value there is remarkable. So we're talking about mortgage-backed securities, CMBS, ABS, also 5-year treasuries. I think you can look at 10-year treasuries. I suspect that the carries are good and the environment is conducive to an outperformance in the fixed income spectrum going into next year.
Kathryn, thank you so much for joining as well.
Thank you.